Welcome back to the VIP Financial Ed channel, where we help you go further, faster financially. And we do that by helping you understand the ins and outs of how to bank and borrow properly. And for today's episode, which is how to buy your very first investment property, we've got Mr. Joseph Massey back in the studio with us. And we're going to be talking today about how you guys can get started. If you've ever looked at real estate as a potential solution for yourself, of a way to start kind of diversifying your revenue, start creating those income streams that are more residual, perceived to be more passive, then real estate might be a great option for you. Certainly, Joe and I have both had a lot of luck with real estate investing over the years. He and I have actually both been involved in the real estate investing world now for about the same amount of time, almost 2 decades now, as scary as that is, that ages us. And we've both been prominent here in the Denver metro area, have known each other a long, long time, have a lot of the same mutual connections. And Joe is actually the in-house mortgage professional for the Your Castle real estate community, which is one of the fastest growing real estate agencies here in the Denver area. They just acquired another 250, 300,
200 something agents.
Unbelievable. Yeah. They're at something like 650
agents now.
Big company.
Big.
Charles Roberts has been featured here on this channel a number of times. Make sure you check out the Real Estate Investing 101 training with both Charles and Josh Hansen, where we walk through some of the subjects that Joseph has been brought in to teach with us a number of times too, which is how do you build your portfolio and then own these pieces of real estate completely free and clear? And we do that through kind of a collective group of techniques, one of which involves the debt weapon utilization process. So today we want to kind of dovetail onto that. If you're not quite that far along, if you're looking at it and saying, you know, it does sound really amazing to have 10 houses free and clear, but I haven't even started with one yet. What do we need to do to get you past that first one so that we can get you to the second, third, fourth, all the way up to 10 or 20 or 50. Some of our close friends, one of my closest, in fact, Christian, has followed this process now on somewhere around 80 properties, 80 single families around the Denver metro area, makes hundreds of thousands in gross monthly rents. So there is a lot of potential when you start to understand how all this comes together. So I want to try and connect some of these dots for those of you that are just getting started. So what would you say is one of the first key steps to getting your first investment property?
Sure. So, I put a class together about a year ago on exactly this. Everyone that I meet talks about, oh, I want to have 10 properties. I want to have all this passive real estate. And I say, great, how many properties do you have right now? Well, none right now. I'm just getting started. And so after hearing that for several years, I was like, I really need to put together a class on how to buy that first property. And so the very first thing that I want to talk about is think about what you want to buy. Do you want to buy a single family home? Do you want to buy a condo, a townhome, a huge apartment building? Do you want to buy a 2 to 4 unit property? What do you want to buy? And I'm going to encourage you, start small. For your very first property, don't try and buy a 10 unit apartment complex. It's going to cost a lot of money. It's going to take a lot of time. It's going to be really hard to do. Buy something really easy for your first one. Buy a condo. You don't have to worry about the exterior maintenance. You don't have to worry about the roof. You don't have to worry about the plumbing. Buy something really easy, condo, townhome. Maybe you're more of a handy person. You're good with your hands, good with rehabbing property. Okay, maybe buy something that needs a little bit of light fix up. But don't start your very first property buying something that has structural damage and mold and meth, and you've got to go in there and tear half of the thing apart just to get it rent ready. Buy something easy for your first one. Don't try and swing for the fences on your very first deal. There's always going to be plenty of busted homes that you can buy for profit later. Buy one now to get started.
I love that. Yeah, keep it simple. I think simplicity is such a huge element to wealth creation. It's been my experience. Anytime we try and incorporate unnecessary moving pieces, it doesn't necessarily correlate to a significant jump in reward. So the whole risk versus reward relationship should be more closely analyzed. I think that you can get into a fairly stable amount of consistent reward or income without taking all of those unnecessary risks and keep that risk percentage really, really low. So a good piece of advice. What would be another piece of advice that you would offer getting into your first piece of real estate?
Next thing I would tell you is think about how much money you want to invest. All right. Do you have $1,000? Do you have $5,000? Do you have 20? Do you have 100,000? All right, any of those numbers you can use to get started. Maybe I've got $5,000 and then we're going to use some debt weapons to maybe take some advances on a home equity line of credit that I've got on my house to buy my first investment property. Or maybe I have a life insurance policy that I can borrow against for my down payment. Or, you know what, maybe I've got a family member that wants to partner and go in on this with me. I've got the time to invest in finding the property, finding the right deal, and managing the property. And my uncle has the money to invest. We're going to both go on the loan and be on the title together. Think creatively about how much money you want to invest, but also think about how much risk you're willing to take. The more of your own money you put down, the more risky that investment is for you. The less of your own money you put down, the less risky that investment is for you. However, you might not make as much money if you're not putting your own money down. So what's your take on risk versus reward?
Well, one thing that I've always attempted to do is invest with little or none of our own money. I've always been fascinated by the infinite ROI concept, and that works out pretty well for us, but it does require additional servicing. I mean, if you're borrowing money to use for your source of investing, you've got to pay back what you borrowed. But I agree with you. I think probably the best piece of advice that I could offer, having had thousands of calls like you have, is everybody's different, and so probably one of the best things you can do is get in and have one-on-one time with people that know the right questions to be asking to help you determine the roadmap that's best for you. And so I would just encourage you to check out the description below, and there's going to be a link in there, an email. Contact us at vipfinancialeducation.com. Go ahead and send us an email, and I'll personally make a warm introduction to Joe. And you can spend some time with him, or he can refer you to somebody in your state that's an expert that we feel confident can answer these questions for you or help you answer these questions correctly for yourself. And I think that's the biggest thing. When Joe's giving you these hypotheticals and saying, well, maybe you've got this uncle and maybe you've got this life insurance policy, that's all it is. Those are hypotheticals that pertain to a very small select percentage of people listening. It's probably not you. So what is best for you is the question that has to be thoroughly investigated.
That's right.
And that's why conversations with people like Joe, conversations with people like us are imperative to your success. So I would send an email to us so that we can introduce you to Joe, and then also get your one free coaching session that we promise you here through VIP if you haven't done that yet already, and that link will be in the description below as well. So I guess that's how I would answer the question. The age-old, least popular answer, which is it depends, right?
Yep.
Nobody likes that answer, but it really applies in this case.
I teach probably 10 different investment property courses that range from 1 hour to 4 hour class. And in all of them, at the end of the class, I get the same feedback. Well, I think really it just comes back to exactly what I want to do. I'm like, that's exactly right. My whole job is to give you all the options, and maybe there's 5 options for you or 100 options for you. My job is to give you all the options, the pros and cons of each, and then you pick the one that makes the most sense for you. And what's really interesting? Maybe option A works for this property, and on the next property, option C is the right one, and on the next property, maybe it's option F, and the next property, maybe it's back to option A. It all depends on the investor, the particular property, the pros and cons of that property, the timing in the market. There's a lot of different variables, and anybody that tells you this is the only way you should invest, this is the only way you should do it should always be done like this, I've got a real problem with that.
It shows a lack of experience because it's impossible. There are too many things outside of your control that you have to factor into each and every deal. And so you may ask yourself, how do friends of ours like Christian get to an 80 property portfolio of long-term buy and hold when that far surpasses what the traditional investor sees as being possible? Because the typical traditional conventional Freddie Mac, Fannie Mae lending guidelines restrict investors to a specific maximum number of financed properties. So if that were true, then these people would not be able to purchase beyond 10 properties. So somebody that has gotten to 60, 70, 80 houses has had to think out of the box and structure each deal completely different from one to the next. So build a great team.
Yeah.
What would be another key piece of advice that you would give a first-time real estate investor?
Exactly what you just said, build a great team. Who's going to manage this property? All right, we're buying this rental property. We figured out we want a condo or single family home. We figured out how we're going to pay for it. We're going to get a tenant. Who's going to manage it? Am I going to manage it? Should I be paid a management fee if I am the owner? Should I also take some portion for managing it? Am I going to hire a property manager? How much do I pay that property manager? Are they good? What do they do? How much authority do they have? Do they have authority that they have to call me every time they spend $5, or can they spend up to $250 and they don't have to call me? Who's screening the tenant? Do I have a background tenant screening service? Do I have a tenant placement service that's doing it for me? Am I finding the tenants, but then they screen them? There's a million different questions, right? Comes back to what you said, have a great team. Think about how you're gonna do it, who's gonna manage it, and how much time are you gonna put in? Do I have enough time to screen tenants? Do I have enough time to meet with people and say, boy, this person seems like a legit person and I think they're gonna, pay the bills, or boy, I've got a no smoking policy and I'm sorry I noticed you were smoking in the car when you came up. Are you gonna be comfortable turning that person away? There's a lot of things that folks don't realize until they get started renting those properties that, boy, it might be easier to have a manager. Or, you know what? Boy, I really hate my manager. I don't feel like I get my money's worth. Maybe you should do it yourself. What's it work for you? What's your option?
I manage my own.
Do you?
Do you manage yours?
I do not manage my own. I have a property manager and I don't do anything with them except collect a check.
A lot of guys, lots and lots of ways to do this. One way that you might want to look into a resource, have you ever researched the Jeffrey Taylor stuff, the Mr. Landlord?
No, I'm not familiar with it. Tell me about it.
So Jeffrey Taylor he calls himself Mr. Landlord. I've seen him on the speaking circuit now for, boy, he was coming into the Colorado Association of Real Estate Investor community back 15, 17 years ago. Really terrific educator. And he's got this amazing tenant empowerment process, and you may want to look into that as well. Great resource, but that would be how I would recommend going about almost anything in life, is to try your best to systemize as much as you can. So the more processes and systems that you can plug into, the more effective you're going to be, the more you're going to be able to optimize yourself, the fewer expenses you'll have because you'll avoid the mistakes. So guys, again, try and plug in with a great team. I cannot reinforce that enough.
Don't reinvent the wheel. There's experts out there that have done it before. Read their books, read their manuals, call them, email them. They'll help you.
The biggest mistake I ever made was on the very first multi-unit property I ever bought. And this was a property that I chose not to include my team with. Certainly I had my mortgage professional helping me get access to the mortgage, but I did not choose to include the key coaches and mentors that I have been working with for years and years in the decision. And man, did I regret it. That property ended up costing about $180,000 unnecessarily. So you cannot see everything for yourself.
That's right.
Stop trying to convince yourself that you know it all. The more you can admit up front that you know very little, the more success you can have over time. And the more successful you become over time, it seems the easier and easier it is to begin to recognize the fact that you know very little.
That's right.
And I find that to be a little ironic, but here I am, the most successful I've ever been professionally, arguably the most knowledgeable I've ever been in my life, and I still have realized lately, more than ever before, that I'm clueless. And this is why we have to bring in people that know more than us in the areas where we're the weakest. So that's another point that we recently talked about on a video that we dropped regarding how to Shark Tank your business. Make sure you check out that video. It's a good one. So what would you say is the next thing that people are going to need to do to get themselves into a position here?
Can I comment on that last one real quick?
Please.
That's why companies have board of directors, right? Because it's an outside point of view saying, hey, Matt, you're the CEO of this company. What are you up to? Why do we have this? Why do we have that? Have somebody, this is kind of a side note, have somebody or 2 or 3 people that you can talk to about your real estate investments. Your spouse, of course, but have somebody outside, maybe a family member, maybe somebody that's done it before, maybe your coach over at VIP Financial, maybe your mortgage lender. People call me all the time and say, hey, Joe, I'm buying this property. I know you're doing the loan, but can you take your lending hat off for a minute and tell me what you think of this? And I'll give them
what would you do, right? What would you do
exactly.
if you were in
What
my
would
shoes?
you do? And you know what? Sometimes my answer is completely different than what they said, because I say, you know what? I wouldn't manage it. I'd put more money down, and I would buy down the rate. And a lot of times they say, well, Joe, I want to manage my property myself. I'm like, I know, but the question was, what would I do?
Yeah.
Right? And so have that outside party that you can talk to, 1, 2, 3 people. Now, maybe you're going to do what they say, maybe you're not, but you want to get that outside perspective, because I think you're right. As we get older and more mature, we realize, you know what? Sometimes I'm clueless about this, and those outside parties are going to see things that you can't see. You're too close to the transaction that sometimes you miss it.
And that emotional attachment as well. I mean, you're going to care. You're going to care about the properties you're buying. And frankly, your coaches and mentors are a lot more impartial than you are. And I think that's key. I would also argue one element here, at the risk of sounding offensive to your entire industry, it's impossible for a mortgage professional to feel entirely impartial, because frankly, they're not. Neither is your real estate professional.
That's right.
Neither is your financial planner. Guys, understand that certain people have that certain skin in the game.
Interests.
And what I really, really like about people like Joe and working with people that have a long, long history of reputable success, especially with massive volume. Because Joe, you're at somewhere in the 250, 265 transaction per year range right now.
Yeah.
Guys, very few mortgage professionals hit these types of numbers. So somebody like Joe doesn't necessarily have the financial dependency, urgency.
I'm going to pay my bills if you close your transaction with me or not.
That's
So
exactly what you
the
need to
truth.
find. You need to find somebody that their tomorrow has absolutely no dependency on you closing on a loan with them. And
That's right.
my experience in the mortgage professional world is that very few can say that. Most mortgage professionals count on each and every single transaction in the month in order to make sure that things are going smoothly and that the numbers are being met, and that frankly there's food on their plates, not just exceeding quotas and financial objectives. I'm talking about paying the bills. So work with somebody that has a long history of really, really successful reputation, that is reputable in many different communities. And that's what I can say about this guy here. He knows all the same people we know, been in the same real estate investment associations for years and years and years. You got to work with somebody who cares about their reputation.
Absolutely.
So go ahead.
Last point that I want to cover about buying your first property is you've got to know the market. Now, I know we're talking to a national audience, but I'm going to talk just a moment about things here in Denver. So what we're seeing here in Denver is properties are skyrocketing in price, and we're finding it very difficult to find properties that cash flow to a 6, 7, or 8% cap rate. So I've seen a lot of investors going outside the market. They're saying, you know what? There's no deals in Denver anymore. I'm going to go look in Omaha. Okay, what'd you find in Omaha? I found a property that has a 20% cap rate. I'm making 20% year over year. I'm buying it for $100,000, renting it out for $1,500, $1,600, $1,800 a month. I'm like, that's terrific. And then we go back and we look at what's the long-term appreciation of that property. All right, it's $100,000 today. Guess what it was 10 years ago? $97,000. Guess what it was 10 years prior to that? $93,000. So yes, you have a great cash flow on a property you didn't pay very much for, but that property is not appreciating. Are you okay with that? And that comes back to what we've talked about in a separate video, is your exit strategy. Are you planning to sell this property for a huge profit at some point in the future? If no, maybe that's a good market. If yes, I want to sell it and I want to make $200,000 when I sell that property, maybe Omaha is not the right place. Maybe you need to look at a place like Denver that has a little bit lower cash flow, but more appreciation upside. I'm not saying one is better or worse than the other. What I am saying is you need to understand your market, you need to understand your investing goals, and if I've got to go to Omaha to manage a property, that's a heck of a lot further drive than if I've got to go from Denver to Aurora. So think about that too. Even though you might have a property manager in Omaha, what happens if the property manager goes on the wagon or off the wagon, whichever one's the bad one, and I have to go to Omaha to manage the property? That's going to be trouble, right? I personally advocate for investing in your market and understanding your market, because if something happens, it's right in your backyard. Not for everybody, but just think about it and think what makes sense for you and your goals.
And I guess if I was speaking from a personal standpoint, I've always been a cash flow buyer rather than a speculated appreciation buyer. And again, I think that's completely subjective.
Yep,
and the only reason I think I've been swayed to that side of my investing strategies is because of the volatility that we inevitably are going to face economically, no matter when this video is on your screen. You could be watching this video 2 years after the date we publish it, and this is still completely relevant, because in the next downturn, a property that you bought for $100,000 that suddenly declines to $50,000, well, what happens if you bought one in a high speculated appreciation area that drops really suddenly as well? It may take years and years for that to come back and then go back into that high appreciation above what your original purchase price was, whereby you could have been earning a lot more cash flow over that short-term period. My personal take, buy for cash flow and you're always safe. Buy for speculated appreciation, there's going to be a bit of a gamble to that. But
I agree.
Who knows? So that's a really great point. Guys, we're going to go ahead and include an investment property analysis worksheet for you, courtesy Mr. Joseph Massey, guys. And this is one of the single best gifts that we've ever given away on this channel, along with the Cash Flow Cruncher worksheet, which you'll get when you schedule your one free complimentary, a little redundant there, coaching session with VIP. We do offer one to every viewer here who has at least $500 per month on average in leftover cash flow. We're also going to be happy to introduce you to Joe. If you guys are in the market for a new property and you need a great mortgage professional, Joe has connections across the country. If you're here in Colorado, you'll be able to work with him directly. So this is a perk, guys, for you guys. We love you very, very much. Thank you so much for being a part of this cash flowing community. Check out the description below for those links. Also, if you have not yet subscribed to the channel, consider doing so as well. Make sure you turn on the bell notifications. That'll alert you every time that we drop another video. Joe and I are going to be sharing a lot of really cool topics in the coming weeks, months, and even years. So be on the lookout for him. He is a core piece to our family here. And certainly make sure you throw a thumbs up down there too. If you like this type of content, you want us to continue to share with you ways of getting started in real estate investing, ways if you're already in real estate investing to succeed at an even higher level, ways to avoid tens or even hundreds of thousands of dollars worth of unnecessary banking expenses, interest costs, how to own real estate completely free and clear. Guys, how would you like to have a 10 property portfolio completely free and clear? Most people that I've seen in the 15 years of working with people one-on-one could easily afford their ideal lifestyle with that type of a portfolio. So,
and do you know how you get to 10?
Start with one.
Start with one.
That's right. So we started a company back 2008, Art Vasquez and I. Art's well known as one of the most active real estate wholesalers here in Colorado. At one point did somewhere around 400 or 500 transactions in a 3 or 4 year period of time. Absolute animal. And we started this process called the power of +1, which is just worry about one next property. If all you did was bought one property more than what you have right now, and you worry about fast tracking the payoff of that using the techniques that we teach on this channel, and you owned it along with your primary residence with absolutely no debt at all, what would that do to change your financial future? And the math behind that conversation is quite extraordinary.
Yeah. I love the story that Art used to tell about his parents.
Oh, that's
when
right.
His parents retired, he thought, man, if they would have just bought one property that they would have rented out and had cash flowing and paid off, how much of an impact would that have made to their retirement? And then I think about my parents and other people's parents that I know, and I'm like, I need to start buying property, even if it's just one, so that I don't fall into that same trap.
And it goes beyond your lifetime. So don't think of it selfishly enough to where you think it's only there to impact you up until the day you pass. Guys, this is legacy. This is stuff you can leave behind to your offspring or to your other loved ones, to your spouse. This is a big deal, and we're in it for the long run. I mean, I'm gonna start getting hold shirts printed up, the hold on for dear life, because guys, I ride this stuff out. You want to see somebody that goes down with the cryptocurrency ship, you keep your eyes on this channel, because I'm gonna ride this thing to the top and possibly all the way back down. But we want to see what's possible, where these wheels are, what has legs. Real estate always has legs, guys. Just look at history and it'll tell the story. But we really appreciate you being here on this channel, on this video, and until we see you on the next one, make it a great day today and take care.
Thanks, Matt.
Thanks, Joe.